ladies and gentlemen. Welcome to the Money Mentor podcast with your host, Graeme Holm, aka Australia's original money mentor. And again, we have the amazing Dr. Andrew Wilson. Now, again, in case this is your first time and you've been living under a rock, Dr. Andrew Wilson is Australia's leading independent property economist, and independent is the key word. His information and his advice and knowledge and data is not skewed towards any bank agenda, government agenda, any particular organisation. I say again, independent leading economist. Now, who is Doc? What has he done? He's currently the chief economist of My Housing Market, previously chief economist of Domain Group, and a whole heap of other very well-respected organisations. Qualifications-wise, why do you need to stay tuned? Well, most of you know, but if you're not aware, Dr. Andrew Wilson holds a Doctor of Philosophy in Housing Market Economics from RMIT University, Master of Science by Research, RMIT University, Graduate Diploma in Economics, Monash University, Bachelor of Construction Economics with a distinction. He's a smart cookie, RMIT University. He's also a member of the Royal Institute of Chartered Surveyors. So I'll leave it there, because if you add all those letters up when you start going PhD, MSc, grad, he's got more letters after his name than I have in my legal 3 birth names. So good morning, Doc. How are you?
Yeah, I'm good, Graeme. And can you believe we're into the last week of September? Means the first month of spring is behind us. And we've certainly had a surprising start to the spring selling season. A lot of the doom and gloom isn't so much doomy and gloomy. It's certainly a little bit more positive, our markets, but we have some way to go, 2 months to go. But typically the beginning of spring is a good time for sellers, and we tend to have more stock in the market as spring progresses. But so far, so good. And the early data is certainly showing rising markets in Melbourne and Sydney particularly. And by rising markets, I mean that they're not falling as much as they were. But certainly the trajectory is upwards in terms of activity. And, I think that portends well for the remainder of the season. But we've got a few hurdles to jump, particularly interest rates, of course, but perhaps the punters in the market are becoming a little bit, so-so about higher interest rates and getting on with the business of buying and selling.
Yeah, I think, Doc, the doomsday preppers for the Australian housing market, unfortunately, have been fairly wrong yet again. So here we are going, well, it's not as bad as we thought. So given that, Doc, how bad or how good is it this week? What have we seen over the last week? What data's come out?
Well, we always look at those auction clearance rates, Graeme, as a starting point. And of course, it was a disjointed weekend because of the AFL Grand Final for a start. So we had quieter numbers, particularly in Melbourne and Adelaide, which tend to be, more tuned into the AFL Grand Final. Brisbane numbers were also down. We had the reverse happening in Sydney and Canberra, where auction numbers were higher because, of course, next week in Sydney, New South Wales, we have the public holiday. So agents have front-end loaded their stock to avoid the clash with the long weekend next weekend. So we had quite a solid, in fact, I think, understates number of auctions in Sydney. Sydney had well over 700 or over 700 auctions at the weekend, which pre-COVID was around about what we would expect on the or the first Sydney Super Saturday of spring. Lots of S's there. So numbers not too bad. So sellers are still happy to engage the market in Sydney, as they traditionally do in that pre-long weekend holiday. But I guess the surprise was, Graeme, it was another, solid clearance rate from Sydney. So there was no real, impact of those higher listing numbers on buyer depth. So the clearance rate was actually higher in Sydney compared to the previous weekend, despite that surge in auction numbers. Now, Sydney's really been tracking consistently around the mid 60% mark over the past month, Graeme. It's certainly lifted up from the high 50s and low 60s of through winter. And again, I think that's a substantial sign that the market is just shrugging off all the negativity. And of course, we know that once you get to around that 65% auction clearance rate, that's the sort of the neutral rate in terms of buyers and sellers. That's when it's reasonably balanced, and prices growth is steady or neutral. So and again, it's not just that 65% mark. It's the fact that there's no doubt that the trend is rising in terms of clearance rates, Graeme, and we know that clearance rates do reflect what's happening in the broader market, auction clearance rates, and also do reflect what's happening with prices.
So it's pretty stable. I mean, Sydney's the one that we're expecting the big doom and gloom, Doc, based on population, obviously, and where the market activity is. But it's just holding strong. It's clearing that mid-60s week on week on week.
Yeah, look, that's right, Graeme. And look, Sydney led the charge upwards over the last 2 years, massive increases in house prices. And of course, no surprise, once those affordability barriers came into the equation with skyrocketing prices, we saw buyer activity start to decline. And of course, a lot of the pent-up demand through the lockdowns of COVID was satisfied. So no surprise, we saw the market move into pause mode earlier this year. And as I said, Sydney led the charge downwards. And so maybe it's leading the comeback. It's the comeback kid, the Sydney housing market. But certainly, I think that when we get the full September data out for the month in terms of house prices, I think we'll again see that the rate of decline in house prices is certainly easing in the Sydney market. And we, those numbers also tend to be backward looking, Graeme, because we can see with those auction clearance rates have certainly steadied and moved upwards over the month. And I think that's why we sort of discuss those auction clearance rates in some depth, because it's telling us what's happening now rather than, what's happened, a month ago or a quarter ago, 3 months ago. So I think it's important to focus on that. But yeah, look, I think it was a bit of a surprising result given the big number of auctions, Super Saturday in Sydney, and yet we had a higher clearance rate and cleared the 65% mark as well.
And a lot of stock on there, over 700 the week before, mid sixes, the week before that, 600-ish. So a lot of stock and a stronger clearance rate with more stock on market. So pretty impressive, Doc. You're right. It's the comeback kid. But I want to jump to Melbourne. It really is. So I want to jump to Melbourne for a second, because as we know, Melbourne, big auction state, AFL grand final, basically the entire state shuts down for AFL. They love their AFL down there. But clearance rate, the same as the previous Super Saturday, almost bang on.
Well, that's right, Graeme. In fact, I think the numbers were a bit of a surprise too. Melbourne, I think these numbers were quite high for grand final day. So, firstly, there were those that were, I guess, ignoring the grand final and were happy to go into the market. And a lot of the outer suburbs do that, particularly the outer eastern suburbs. We do see, more action there on these, particularly on that grand final day. Clearance rates, typically are lower on the days where we have holidays. But again, the Melbourne clearance rate stood up. In fact, it was the same as the weekend before. And I think Melbourne has been, in a way, the great survivor through the winter period, because the Melbourne market really hasn't tracked backwards, certainly not as far backwards as Sydney has through that period. And I think the Melbourne market really has been quite resilient through the higher interest rate period, Graeme. Of course, it too recorded very strong prices growth over the past 2 years. Again, affordability barriers acted to ease activity in the Melbourne market, but it certainly hasn't slipped as much as the Sydney market. And I think there's certainly potential for upside in the Melbourne market going forward. And we've got some latest data today on migration trends, and we can see that the latest data, which is a bit backward looking for the March quarter, has Melbourne or Victoria reversing quite quickly in terms of international migration. We have discussed this before, that's a key factor that we think will help the Melbourne market rebound, but it's already occurring. I was a little surprised at how strong those numbers were, Graeme, over the March quarter. And of course, we've got a lot more to come in. but certainly it's validating what we've been discussing, that opening our borders up will have a significant impact, in my opinion, on what happens with our housing markets, and certainly the big migration, international migration capitals of Melbourne and Sydney will certainly take advantage of higher demand for housing. So yeah, Melbourne, it was the great survivor again over the AFL Grand Final weekend on the Saturday. Higher numbers than perhaps we normally see, and a clearance rate holding steady. So people were still happy to engage that market.
There you go. And Sydney did pretty strong, although their AFL team not so strong. But their auction clearance rates very strong. So I won't take any more stabs at the poor Swannies. But Doc, we might not. I mean, everyone can see on screen here. Brisbane, Adelaide, Canberra. They're very low auction market cities. They're not the Sydney and Melbourne. So everyone can see the data on screen here on YouTube. So we might push on that from that today for time, Doc. What else has happened over the last week? What data's come to light? What's the market doing? What's the economy doing?
Well, if we look firstly at prices, Graeme, every week we put up the latest asking prices, and these are actually daily asking prices. So this is not sale prices. This is what people are asking for their properties that are for sale, and that gives us a good sign or indication of what's happening in the market. They tend to be more volatile, of course, because it goes from week to week. But when we see the trends, we can see there that, again, it's sort of reinforcing the underlying trend. Even though asking prices for houses fell back a little over the week in Sydney, they're still maintaining a higher position than where they were earlier in the month. And I think that sort of validates, what we've been discussing with our auction clearance rates. Melbourne's been quite steady through the period. Again, it was down a little bit lower over the week, but of course, there were distractions from the AFL Grand Final in that market. But as I said, these figures tend to be volatile and bounce around. And Brisbane has certainly come off its highs, but it actually had a stronger weekend or stronger week for asking prices for houses. And the Adelaide market continues to rise. Its asking prices increased over the week, and Perth down a little. Unit prices are steadier, but certainly some positive signs there that the improvement in the Sydney housing market is working its way into seller expectations in terms of where they're pitching their house prices at the moment. We've also got the latest rent data, Graeme, which I think is interesting. Again, this is a week by week daily data set, so it can be volatile, but nonetheless, it gives us a sign of what's happening in real time. I think the interesting point, which we have been discussing, is that the Sydney house rents have actually steadied. They got as high as $670 a week. We were thinking, oh my God, are we going to get $700 a week rent in Sydney? But that's now started to stabilise. It fell back to $650, but it's holding at $650 now over the month. But the interesting thing is that unit rents are starting to rise. House rents have steadied, and I think it's because Sydney siders at this stage just can't afford to pay that $700 a week, for houses. And
do you think as well, Doc, that a bit of migration now occurring, borders open again? Typically people that are migrating want to be near employment nodes, transport, logistics, So that is also, do you think, creating some stronger competition in the apartment or unit rental market?
Yeah, absolutely, Graeme. And you can see there that over the month that Sydney unit rents have increased by $25 a week.
Wow.
That's a big surge over the month. And I think that sort of validates, what we're saying about, the high price of Sydney house rents driving tenants now into the unit market, because they have no choices. It's an affordability decision. Now, Melbourne rents have been stable. They're much lower, of course, than Sydney rents, more affordable market. Brisbane also, its rents have been stable, although over the month unit rents have increased in Brisbane. Reasonably steady rents in Adelaide, although unit rents increased over the past week, and a similar story there in Perth. I think, though, the real interesting point is the high-priced Sydney rental market, Graeme, is certainly showing the stress of too much demand and not enough supply, with the switch from from houses to units looking like it's occurring, with steeply increasing rents for houses versus steady rent. For units versus steady rents for houses.
And interestingly, Doc, I've seen in the last week come out that the Queensland government are allowing auxiliary dwellings as granny flats, and so to speak. They think that's going to solve the housing crisis in Queensland. They're saying we're now going to let you rent out your granny flat without any penalties or, a specific approval as an auxiliary attached or detached dwelling. That's an interesting move.
Yeah, but I think that's only going to appeal to, a small section.
Absolutely.
Of those that are
tiny
in the market for tenancies. They seem to be a bit all over the shop at the moment, the Queensland government, in terms of their policy announcements. I think they know they're in a tough position. On the one end, they're squeezing the supply side by raising
taxes,
charges, and then on the other end, they're trying to offset that by increasing supply, as you mentioned, but I'm not sure that those two factors will balance themselves out.
Well, then we've got Mr. Dominic in New South Wales saying he's not going to hand over any data. And then the Queensland government saying, oh, well, it's a goodwill system. We just want you to be honest if you own property elsewhere. And I'm thinking, this is probably one of the worst policies I've ever seen implemented.
Well, look, this is what happens when we're in these circumstances, Graeme, when we've got a clearly undersupplied housing market, but, and we're in a position where real wages are falling. So affordability is an issue, with interest rates rising as well. And we just haven't built enough houses over the journey, again, through policy decisions that were highly questionable. And now, you're left with having to pay the price for all these issues, for all the issues that have developed as a result. And to me, a lot of this is just a knee-jerk reaction. And at the end of the day, it actually might cause more problems than it actually solves, Yeah,
true. So rents are holding strong, Doc. What else is happening at the moment? What other trends are we seeing at the moment?
Well, when we look at the big picture, Graeme, we know that we have an interest rate decision next week. We've seen over the past week that the UK and the US have increased their interest rates. The US put up its rate by another 0.75%. The US is very concerned about the outlook for inflation. It is now becoming a little bit less certain that it won't have a recession going forward. Of course, the whole point is, Graeme, the unemployment numbers, which are all in the low threes, except in Europe, which is an aggregate of a lot of different countries, but unemployment rates are in the low threes, mid threes everywhere. Now, you're going to have to see those numbers a lot higher than that before we get it, that inflation dragon, under control.
Yeah.
And we're seeing nothing of that yet. So low unemployment means people are in a strong position in terms of high demand for labour. They can bid up their wages, which gives them more money to spend, which means that it keeps fueling inflation going forward. So this is a bit of a journey now. Particularly for the US and the UK, you can see, or we can, when we look at the GDP comparisons, talking of recession, we're actually in a good position. We had quite a significant result for our GDP numbers over the June quarter, but we compare that to other similar economies, they were all lower. Their GDP was lower. In fact, the US has had consecutive quarters of negative growth. So, and part of what helps us is our very strong export sector, Graeme. The interesting thing about that, our terms of trade, which is the balance between imports and exports, is at record levels. So we're doing very well. But the point to the higher US interest rates, again rising by that 0.75% mark, is the US dollar is now going through the roof. And if we look at Australia's dollar, the dollar versus the US dollar, we can see our dollar is actually falling through the floor. But that's actually not a bad thing, Graeme, because that lower dollar will work its way into higher prices for our exports. And even though it does mean we'll pay higher prices for our imports, it's really only US imports which will give us that imported inflation. And our key trading partner, particularly for consumer goods, is China. And China are really a bit so-so at the moment in terms of their economic performance. So I think we're on a bit of a win-win here. We're not going to be affected by higher import prices because we don't export a lot, working its way into our inflation because we don't import a lot from the US. But we're certainly going to get a good surge from our exports because our exports into the US particularly because our dollar is so low. So some interesting news there in terms of interest rates. And as I said, Graeme, we're still well positioned when we compare ourselves to other similar economies going forward. But we did have some big, interesting numbers, some big numbers, and they were big numbers come out this week, over the last week, Graeme. And the ABS released their migration population numbers for the March quarter. And this is very important. Of course, we've discussed this at some length before, and that is that, our housing markets have to some degree have been influenced by locked borders. Well, we know that because, lack of demand from overseas, you would have thought would have impacted our rental market for a start, and our price market, our housing market generally with house prices. But it hasn't happened because of our chronic undersupply. But now that borders are open again, Graeme, the latest data is really quite remarkable. We've seen a significant rebound. Now, this is we'll look at the net migration data.
This is interstate net migration, Doc?
Well, this is total net migration.
Total net migration,
so
okay.
This is the difference between, people coming in and people leaving. So this is total net migration. And total net migration, as you can see, when we look at that charts, Graeme, has bounced back really strongly everywhere, but particularly, of course, in New South Wales and Victoria, which they fell in a hole, obviously, with closed borders, mainly because of the impact that international migration typically has pre-COVID on New South Wales and Victoria, Melbourne and Sydney, which are big destinations for migrants. Now our borders are opening. We're seeing a really strong rebound from Victoria and New South Wales numbers. They're now well and truly above the line. And of course, this is March quarter, so we've still got a long way to go to satisfy, all those that are waiting in the queue to come into the country. So big rises there in New South Wales and Victoria over March. This will, of course, fuel demand for housing, Graeme, as we've discussed, not just homes to buy, but also homes to rent. But the other interesting thing, Graeme, was another big increase in Queensland's net migration. It just continues to rise. And if we break down the numbers and look at where they're coming from, we can quite clearly see the rebound in New South Wales and Victoria. And this is we can see the annual growth in New South Wales and Victoria for overseas migration. And you can see everybody's benefiting there. All the states have had an increase in net overseas migration as borders are opening up. But when we look at the position for interstate migration, net interstate migration, we can still see that New South Wales and Victoria are still losing residents to other states. And good old Queensland is still chugging along there.
It's funny, you got everybody migrating internationally who are all coming to New South Wales. They're all going Bondi Beach and sun surf sand. Yet once they're here, they're all going, bugger this, I'm going to Queensland.
Yeah, I think the locals are the ones that are going to Queensland. But that's another record, Graeme. That's another record annual increase in net interstate migration into Queensland, an unprecedented number. So it's still continuing. I mean, we're thinking that perhaps, and it will ease eventually from these numbers, but still there's plenty of appetite there for migration into Queensland, another record. It's still, we can see where it's coming from, and it's coming from New South Wales and Victoria, that the numbers are still declining there. But of course, that's being offset by a big surge in international migration into New South Wales and Victoria. And this is only March quarter data, Graeme, remember. So, we're looking back 6 months at the moment. And we know that there's been problems, with the migrant visas, getting them all set and the applications all finalised because of a lack of staff, I think, which says it all about our economy, a lack of labour. But there's lots more to come. I think that's the bottom line here. But the interesting point is that it has started clearly. It will work its way into housing market activity. And Queensland's still a very, very strong destination for interstate migrants.
And interestingly enough, Doc, it's the question, over the last few years, would Queensland's economy hold up? Were there enough jobs? But they've been creating jobs. These people are either working remotely or the jobs are being created as they're arriving, and it's holding strong.
I think that's a really good point, Graeme, about the remote workforce. And I think that's meant that there was the capacity for a lot of those interstaters that have moved into Queensland to be able to continue to work, from another capital city, if they're moving into Brisbane, and if they're moving from a capital, obviously Melbourne or Sydney. So I think that's an important point. But nonetheless, the Queensland economy has clearly had the capacity to absorb a lot of that migration because its jobs growth and unemployment rates are similar to those in the other states for sure. But I think it's also interesting that Western Australia has been a destination there also and that's a big number for Western Australia.
Huge number for WA.
Yeah, so they're also taking advantage of still a bit of that COVID sense of, I want to go somewhere where at least I perceive it's safer to live. Maybe it's got a lot of publicity through the COVID journey, which has attracted people. But that's a big number for Western Australia in terms of interstate migration. And again, I think that's helping, with still a reasonably solid upward trend in, prices in the Perth housing market.
There you go. And what else has brought your attention or grabbed your attention in the last week or so, Doc? Anything that people should be alarmed or concerned about? Any of the headlines coming true?
Well, I think obviously we're becoming a bit more positive about the outlook for our housing markets, particularly Melbourne and Sydney. Our economy remains certainly in a better position than other comparable economies. We've seen those comparisons. But next week, of course, we do have the October meeting of the Reserve Bank of Australia. There will be another interest rate increase. The question is whether the Reserve Bank, at what level the Reserve Bank would be influenced by what's happening in overseas economies, particularly the US and the UK, which raised their rates quite steeply last week, and whether there would be any sort of influence from that work its way into the decision next week. The latest word we had from the RBA was that it was thinking, maybe we don't have to push them up as high as we thought, and maybe we'll be able to, come to that steady interest rate position sooner than we thought. These things are pretty flexible, Graeme, but all will be revealed next week. But of course, what we're awaiting in about 3 weeks' time is the latest inflation data. The point with the US and the UK is that they have monthly inflation data, so they can adjust their interest rates according to what they can see is happening on a month-by-month basis. Whereas we got up until now, we've had to wait, for quarterly data, which actually tells us what's happening 3 months, in fact, 4 months ago. Because it takes nearly a month for them to release the data, the ABS. Changing that, they're going to have a monthly data set starting in October. But they're still not sort of saying, it's going to be the one we're going to look at. We're still going to have a quarterly data set. It just ties the RBA's hands a little bit, Graeme, because they are restricted by what's going on in terms of, the robust statistics. So again, whatever decision they make next October is not, based on current data. They're still the latest current data for inflation is now it's over 3 months old.
Yeah, it's a bit of a history lesson, sadly, Doc. But we know that with rates, as we say, every increase is one step closer to a decrease or some normalization, because it is a history lesson, and we are acting off a history lesson. It's old data. So
yeah, that's right, Graham. It's just a question of whether the RBA, are influenced by what it thinks might be a negative result from the global economy. And in fact, that might assist them in not raising rates as high as they might have. But it's certainly a vexed question, and they don't want to be importing inflation. The dollar's falling, which I'm sure they're actually probably reasonably happy about, because it helps our exporters. But we're in uncertain times. But I think the interesting thing is that the Australian consumer, Graham, is just getting on with business at the moment.
Yeah. Life goes on. The show must go on.
Yeah, buying, selling, and thinking about moving on and just absorbing. And we've got to remember, at the end of the day, our interest rates are still at very low levels compared to the historical experience. So next week, Graham, we'll be very excited. We'll be able to discuss the latest interest rate decision.
Oh, looking forward to that one, as always. We know it's most likely up, although
yes,
it'll be up, but it's going to settle soon. So, well, Doc, thanks for your time as always, and we'll see you next week.
Yes, always exciting to chat, isn't it, Graham? And and we'll have the official numbers for the September quarter and for September in terms of rents and prices, so we can have a close look at that also next week.
So we'll have a really clear data set, everyone, for the better part of the year when we get together next week with Doc. So make sure you tune in next week. Thanks, Doc.
Thanks, Graham.
Well, there we have it, ladies and gentlemen. Brilliant and informative from Doc Wilson, as always, and sometimes not too bad myself. Hopefully you found that extremely informative. And for those of you who are tuning in regularly, don't forget to check the show notes. And if you are looking for a bit more financial education and financial literacy, and you'd love to spend 2 days with people like myself and Doc Wilson and chartered accountants, etc., I encourage you to go to money-mentor.com.au, and I'd love for you to be able to use the discount code podcast1500. That's podcast1500, and you'd be able to spend 2 days with people like Doc and myself. That's usually $2,000. It'll be just $497. Have a look at the show notes, ladies and gentlemen. Look forward to seeing you soon.